Hey, everybody out there in Facebook, YouTube, social media land. Welcome to the third installment of Ask a Trader. You could just go ahead and throw your questions in the chat as we go along here. If there's something that you want me to answer or talk about, and if not, what I'm going to do is just we'll take a look at what's happening in the markets here today, just kind of see what's going on, and we'll start by looking at the broader markets on the daily charts to just get a feel for where things are, and that's where we will begin. And if questions come up, I will address them. But just starting here, looking at the SPX right now, and you can see we've had 6 green days in a row. Now, uh, that's a really um, thin candle, I guess is the best way that I could put it. But definitely the bulls have taken charge here and have completed this double bottom pattern. If we were to go ahead and draw this out, we could grab the highlighter here. Here's our double bottom. Here's our neckline. We got the close above that. And one of the things that I was watching last week on Friday is we were hanging out right on that 50 SMA on the daily, and we needed to get above that to push higher, and we have. Now, the only thing that's concerning to me, if I'm a bull when looking at this, is just the decreasing volume here. And volume all week has been a bit down. So I don't know how much stock I'm putting into the price action that we've had so far this week in terms of strength. We are getting closer to those all-time highs on the SPX. You could see that currently right now, because the market is open, we're at 52.10.73. So we're pushing higher back up into that all-time high. And if you look at all the other major indices, similar patterns. Again, here's that double bottom. You see it on the Qs as well. We're above that 50, a little bit more ways away from the all-time highs on the Qs. If we go to the Dow Jones, you could see same thing, really strong candle today. But again, if I'm looking at this volume, it's just not a lot, right? We want to see when we're starting to make higher price action, we want to see higher volume come in to confirm that. And so again, we're going to see this strength tested, if it's legitimate strength or if it's just, if it's going to succumb to the bears at some point. If we look at IWM, again, this is the small caps. Same thing, double bottom pattern above the 50. We're just kind of chopping sideways here. We are very far away from the all-time high in small caps. And keep in mind that your smaller cap stocks are rate sensitive. And so until we see rates start getting cut going down, it's going to be a struggle bus for IWM. And the last time it hit an all-time high, you have to go back to 2021, right before the bear market of 2022. And what was happening during this time? That's when zero rates were zero rates. Yeah, they were zero rates. That's when interest rates were near zero because of COVID. And so your small cap stocks, they like lower interest rates. They don't have them right now. And so we haven't gotten anywhere near that all-time high. We need to see those rates come down in order for that to happen. If we look at the VIX, this is just a volatility index to see how much volatility there is in the markets. You could see the spike that we had upon that military conflict between Iran and Israel. And once that got squashed, and really that's what spiked this. And the inflation concerns just kind of fell down. Now, the inflation concerns are still out there, but we've gotten some data points that have come in that have made market makers feel a little bit more comfortable and secure. Jobs data has been in line with what the market wants to see. And that's, what do I mean by that? They're seeing more unemployment claims. They're seeing fewer jobs, which is what the market makers want, because potentially that could lead the Fed to cutting. And so what is good news in the economy is bad news for market makers. So you can see that volatility coming down a bit. And I'll just pause there if you guys have any questions about the broader markets or what I went over, or are there any tickers that you'd like me to look at? Or I'll just keep going through here. And it's okay if you don't. All right. Just feel free to jump in at any time. So just going down through here. Again, we're taking a look at the daily chart right now. You see Amazon made another new all-time high today, and this thing just keeps pumping. This stock really exemplifies the importance of those 100 and 200 simple moving averages, and really just your longer term moving averages, because we had this big dip on the 25th of April, and you could see that lower wick hits perfectly off of that 100 and it bounces. And I'm sure there were some people out there, some buyers who loaded up here at this point and rode this all the way up here and are probably sitting on $25 a share profit. And maybe they've trimmed some of that position, but that speaks to the power of those simple moving averages in terms of your swing trades or your long-term investments. They're great buying spots. But we could see that Amazon's been pushing higher. It made its last all-time high April 11th, and it's just been chugging along since. Now, if you do zoom out a bit, this does look somewhat like a double top. So we'll have to see if that plays out and we do get a pullback here on Amazon, if we can get back down to that 100 or below it. And we haven't been down to the 200 on Amazon in quite some time. You have to go back to, what was this? This past October. We didn't get there fully. We got close. I'm not sure if that's going to happen anytime soon with as strong as everything has looked. NVIDIA, here's a look at how that's been playing out. It's been making higher lows. It's above the 10. It had 3 nice bullish days in a row, and we're getting a little bit of a pullback and a retest into that 10 and the 50, and it could be setting up for a larger play. And you could see this blue line that I have on my screen here. This is its earnings report on May 22nd. That's going to be a big day for this stock to see what it can do. And if you look at the chips who have reported earnings so far in Q1, they haven't been great. If you look at AMD, they gapped down on earnings. SMCI gapped down on earnings. ARM yesterday gapped down on earnings. So can NVIDIA change that trend? They're the king of AI, possibly, but maybe the AI hype is slowing down. It's dying a little bit. So we'll see what happens here. This is a nice little healthy retest into the 10 to set up for potentially a leg higher. I think it has to get to 1,000 first before we get any true correction on this that's meaningful. I mean, we did pull down to 754 there on the 19th of April, but this thing could come lower. But this is going to be a big date here, May 22nd, for its earnings call. Let's take a look at a few others here. Meta has just been on a roll since it gapped down on earnings. You can see that it gapped up on earnings back in February. That was a massive gap, and it almost filled that gap here on its earnings in April. And since that time, and notice it catches right here on the 100 as well. We've had 1, 2, 3, 4, 5, 6, and it's about to be 7th bullish day here on Meta. So I'll be watching this one for a short, just in terms of sheer probabilities. If you have 7 green days in a row, what goes up must come down. And I'm not saying it has to be a massive pullback, but I mean, just going back in time, I'm looking for the last time it had 7 up days in a row. And I found there's 6 here. And then we had a down day. Here's 1, 2, 3, 4, 5, 6 here. And then we had a pullback. So this might be a good short opportunity for tomorrow. We'll watch. Doesn't mean that it has to drop, but that's a lot of up days in a row there on Meta. Let's take a look at Tesla. Tesla had a nice gap up on earnings, even though the earnings numbers weren't great. And last week, it pushed even higher on news that It was trying to get full self-driving approval in China. It hit 198, but since then it's back on the struggle bus, falling below the 10. We're below the 10 again. It tried to push higher today. It's stuck on that 50, and this thing can come back down. I mean, if you look, there's nothing supporting it, holding it up here. It filled this gap that it made on the 26th of April. And so we could start pulling back into the 160s, and maybe it'll fill this gap down to 147. So worth keeping an eye on here. Tesla is not showing the strength that it needs to, and there potentially could be more room to the downside here. If we look at Apple, they had a nice gap up on earnings. Again, not great numbers, but just they did a $1 billion buyback in shares, and investors like that. And you could see that it's holding its spot above the 100 and 200. And this was after it was beat up for such a long time here. And so probably a little bit of consolidation and then grinding higher, maybe back up into its all-time highs is in the cards for it. Let's take a look at a few others here. Just take a look at Bitcoin. Bitcoin has corrected, and I'm waiting for this to make a push higher. We corrected about 23%, and so it just hasn't gotten that push. Now it's having a strong day today, and there's some confluence here of moving averages. You have your 100, you have your 10, you have your 50 simple moving averages all coming together, converging, and you have your 20 and your 50, and you also have your 100 EMAs here. So everything's pressuring in. And so that could speak to a potential big move coming. Doesn't mean that it's going to be to the upside. It could be to the downside. So keep your eye on Bitcoin to see what's going to happen here. And then just taking a look at some things that happened with earnings. So here's Robinhood. So Robinhood reported earnings yesterday, gapped up, and you could see it did not hold that at all, sold off, right? So not a lot of strength there. ARM reported earnings yesterday and gapped down. It got bought up a little bit, so you had some good bull volume coming in here, but this thing has taken a beating since it hit all-time highs on its last earnings gap, February 12th. So this buying we're getting today after a 47% decrease, this is probably a lot of shorts covering, and now maybe ARM could start coming back up. Let's see here. Netflix was another one, had a big gap down after a gap up. What was that? In January. SMCI was another one. Where were they? Right here, gap down. So, some of the companies that had strong Januaries and Februaries have not been doing so hot lately. They're cooling off a bit, which is completely healthy and normal. And we're still in the bull market. My biggest question is, just going back to looking at the broader markets. If this was truly the correction, that was not even 6%. And I would have liked it to at least been 10 to feel a little bit more confident and move up. But if that's all we're going to get, that's all we're going to get. But really, it's almost like since mid-March, it's just been kind of choppiness. Like we got up into these all-time highs and it's been sitting up here. So the markets need to pick a direction. Like, are we going to get that true correction, or are we going to go higher? And the market will do as it wants, but it feels like we're just kind of stuck right now. And if you go back and look at the last bull market that we had, and this was after COVID, you could see that big dip on COVID here. These were the COVID lows, and then we started firing higher. You could see here's the first real deep correction, and that was almost like a double bottom. So maybe we'll get something like this that comes into play. And you can use this bars pattern feature from TradingView, which is really nice to kind of map out and compare what's happening today to what has happened in the past. So if we drag this over here, and we just lay this on top of this right here, maybe we're looking at something like this, right? Where, made that all-time high, we pull back, here's our first bottom, and then we head back up, and then we're going to drop back down, have that double bottom, then we're going to start our next leg higher. So something like that would make sense. And again, with this low volume on this push up, that just makes me question this move. And so I would not be surprised at all to see something like that, like this. And in fact, I'd be shocked if we didn't. So that's how I'm seeing the markets right now. Any questions from anybody out there? Just go ahead and throw them in the chat. And if you don't, that's okay. Just make sure that this is the test out there. Any questions, comments, any chart you want me to look at for you? All right. Well, I'm not going to hold everybody up. If you guys don't have questions, it's all good. I'll be back here next week. I'm going to make this a weekly feature. So if you have a chart next week you want me to look at, or if you have a ticker you want me to look at, just show up. Just jump in the webinar. I'll be here. I'll answer all your questions and help you as much as I can. And if you have any questions in between now and then, just email me couragepaysbetter@gmail.com or hit me up on my Facebook, and I'd be more than happy to help you with anything in the markets that I can. So until next week, that is Ask a Trader for this week. A little bit of a quiet group, and that's all good. But I'll see you guys next week, and have a great weekend. Take care, everybody.